Good morning, traders, and welcome to today's market update. Let's take a look at the key moves shaping the markets this morning. So, starting with the US dollar index, it slipped below 100 on Tuesday as expectations for December rate cut gained momentum. Confidence strengthened after Fed Governor Christopher Waller signaled support for easing, echoing earlier remarks from New York Fed President John Williams and San Francisco Fed President Mary Daly. With the government shutdown delaying key economic reports, markets are relying on older data, and money markets now price an over 80% chance of a rate cut next month. Recent figures point to softening U.S. activity. Retail sales rose just 0.2% in September, slower than August. And wholesale inflation picked up slightly due to higher energy and food costs. And markets now await durable goods orders and jobless claims for additional signals. Declining treasury yields and thin liquidity ahead of the Thanksgiving holiday have limited upside for the dollar. Unless upcoming data trigger renewed demand, the short-term outlook remains bearish. The index still trades above the 200-day moving average at 99.78, but a break below that level could open the way to 99.49, the November low. On the upside, a resistance sits at 100.4 with a further target at 100.58. Next, moving to WTI crude oil. The oil traded around $58 on Tuesday. Expectations of a possible Fed cut in December supported the broader risk sentiment, while uncertainty surrounding Russia-Ukraine peace efforts limited selling pressure. Reports suggest the US peace proposal has been narrowed from 28 to 19 points to make it more acceptable to Ukraine, though the details remain unclear. Any progress that leads to sanctions easing could allow more Russian supply back into the market that already faced surplus concerns for this year. And WTI gained over 1% on Monday amid a broader market rebound. But still, the recent decline in oil prices has been driven more by expectations and policy speculation than by actual shift in supply and demand. A negotiation uncertainty, potential sanctions adjustment, and changing Asian buying patterns keep the market highly sensitive. And technically, WTI remains weak and range bound, with short term moving average acting as firm resistance. The RSI sits in a neutral to soft zone, and consecutive small candles reflect hesitation. If price failed to break through resistance at 59.6, 60, and 60.82, WTI may retest last week's low near 57.33 and the $56 level. Turning to gold, gold traded around $41.30 per ounce on Tuesday after surging near 2% on Monday, driven by dovish Fed comments that ramped up expectations for a rate cut next month. Fed Governor Christopher Waller reiterated his support for easing due to ongoing labor market softness, while New York Fed President John Williams said near-term cuts remain possible. Markets now price an 81% chance of a 25 basis point cut, up sharply from last week. Geopolitics have also turned supportive for gold. The situation in Ukraine deteriorated over past 24 hours, with air raid sirens sounding in Ukraine and peace talks losing momentum. Rising geopolitical stress reignite safe haven flows, reinforcing bullish sentiment. And technically, gold has firmly reclaimed the 4100 level, with short-term moving average aligned positively and MACD showing a bullish crossover. The RSI sits above 58 without signs of divergence, indicating continued upward momentum. If expectations for a rate cut persist alongside geopolitical tension, gold may test 4200 and potentially 4300. And on the downside, watch support at 4100 and then 4059. Now, the Australian dollar. The Aussie dollar held around 64.70 on Tuesday as markets assessed the RBA's policy outlook ahead of Wednesday full monthly CPI release. Deputy Governor Sarah Hunter highlighted three key uncertainties: post-pandemic pricing behavior, labor market tightness, and also surprisingly strong housing market responses to policy shift. And November PMI data also improved, marking 14 consecutive months of expansion, suggesting pockets of economic strength. These developments, combined with stronger business surveys, stabilizing confidence, and also falling unemployment, reduce the urgency for near-term RBA easing. Annual inflation for October is expected to hold around 3.6%, keeping attention firmly on Wednesday print. And Australian dollar continues to trade near the lower end of its range and is testing the 200-day moving average at 64.61. Momentum remains soft with RSI near 40 and ADX around 14, signaling a weak trend. Below 64.61, the support lies at 64.21 and 64 cents. And on the upside, resistance sits at 64.85 and the psychological level 65 cents. So that concludes today's morning review. We will continue monitoring developments in Fed expectations, energy markets, and also Australian CPI release. Have a good day.